Hello, my name is Brad Muniz and welcome to Sobel Insights. Sobel Insights is a weekly series where we provide some brief information on various topics. We like to keep these sessions to 15 minutes. At this time, we do not offer CPE. If you have any ideas for future speakers or topics, please feel free to reach out to me. Today's topic is 5 things to look out for this tax season. Our presenter is once again the famous Mary Ford, who's done a great job for us in the past. Mary, thanks again for coming on because I got some questions for you that I really need answers to. Because
all right, well, let's hear it.
So to start off with, last busy season, which really hasn't ended yet because the IDA returns.
That's true.
Yeah, we have had some fun with the the recovery rebates and the expanded child tax credit, and I know that stuff's been out there. Stuff like that has been out there. And people don't know about it. What's changed with that this year?
Well, there was a lot, still with the pandemic continuing through the beginning part of 2021, Brad, the America's Response Act, the ARPA, came out in March of earlier this year, and they provided 2 huge incentives to people who really needed it. Number one, they enacted the expansion of the child tax credit for families who have dependent children. Not only was it expanded in that they can receive a greater credit amount, this credit will be refundable for 2021. Okay. Even to make it even better for people who really kind of needed the cash up front, Congress allowed these individuals who were eligible to receive 50% of that refundable credit in advance in a monthly installment starting in July of this year. So taxpayers who receive this benefit, really need to provide us with some additional information, because we have to reconcile what they received during the tax year for 2021 to what they're actually eligible for when we prepare their tax returns this year. Okay. The way we're going to reconcile this is they're going to provide us with this letter. I know that everyone's going to get it. Letter 6475. Okay. That is being mailed out right now. A lot of people received theirs last week. So I just want to let people know, give them a heads up that, if they receive the advanced child tax credit, they need to provide us with that form. Like the same thing, the third stimulus payment was also part of that same act. That was the $1,400 per person stimulus, and less people qualified for this one, Brad, because it capped, if you had made more than $160,000 of adjusted gross income, you weren't eligible for the credit. But the people that did receive it, they will also be receiving a letter in the mail. Actually, I had the letters backwards. 6475 is for your stimulus payment, and 6419 IRS letter 6419 is for the advanced child tax credit. So look for those. Make sure you provide them to your preparer this year. It's going to be really important.
So my client received a letter the other day and sent it to me in email, which surprised me that everybody will do that, and said, do you need this information? And I said, yes. Mm-hmm. I didn't know that was the form of what it was, because I looked at the letter and I knew that there was some new letters out, and I couldn't see any numbers on it that I recall, 6475, she doesn't have children, or 6419. Yeah. But I wanted to act like I knew something, saying, oh, that's letter from 6475. But yes, people should get these letters and provide them, please. I know that in the past, the rebate, there was a website, Where's My Rebate? But I don't know if there's going to be a website or IRS tool that says anything about child tax credit. So, well,
yeah, there is something just came out this week, Brad, that they are setting up a website for and I don't have the site. We can share that maybe with this mailing of this. It's the child tax credit, IRS child tax credit website. It's simply for you to go in there and update information, personal information, so that you can get the information you need.
Okay. So people should please watch for these letters. And if you think you received it, don't know if you received it, go online and check for it yourself, because it makes it very difficult for us. We can't go through that for every one of our clients to go search for that information.
No, exactly. Yeah. that would
Okay,
help.
great.
And if they
So-
don't provide us with that information, it might really slow down. It will slow down their refunds, if they're eligible for refunds, and the processing of their tax returns this year if we don't have that information, which is.
I appreciate you saying that because I had multiple people saying I didn't get my refund. Then in the end, I got less of a refund than you said I was going to get. And in the end, I said, well, look for where's my rebate. And sure enough, oh, it says I got one, but I never received it. Well, that's what happened. So, okay.
Right.
So make sure they get this information to us because it will allow us to process things quicker and your possible refund. So the other thing that I see is big and it just can't stop. I mean, I was with some friends this weekend and of course they're talking about Bitcoin. So what people seem to be talking about, it's nothing, it's great hearing a bunch of 50 and 6-year-old guys talking about Bitcoin, like, you know, right?
Yeah. Bitcoin's been really hot this year, but it started the year at like 29,000 and closed at like 64,000. So the important thing that I want to stress here, the IRS is on this. They are on it big time, okay? Last year, they added a checkbox on the face of the Form 1040 that simply asked the taxpayers, do you own, did you purchase, did you sell, did you exchange virtual currency? And that's essentially what Bitcoin is. It's a currency other than, cash, the US dollar or foreign currency. So it's anything that can be used to, barter or exchange. So the IRS is on it. So number one, you have to tell us whether or not you participate, in buying or selling your cryptocurrency. But the kicker is, the IRS treats this as an asset, right? So if you bought your Bitcoin at 29,000 and then sold it in November for 64,000, you have a large gain there that has to be realized and recognized on your return this year. The problem is these, vendors are not regulated, so they're not necessarily required to report to the IRS and provide you with that information. They're not required to do that. So you may have to do some homework to go into your statements and summarize that information for us. Okay, so that's really important right now.
I think they're going to start treating this like the foreign assets where they're not very lenient on improper foreign asset reporting. And I think that if they start finding out that there's improper cryptocurrency reporting, they're going to be coming down very hard on people. So don't be lax in this area.
No, you raise a really good point too, because some of these vendors are, the currency is a foreign currency, right? So where the asset is located is, say, over in France or someplace. So that's considered a foreign bank account. So you would have to report that as a foreign asset if the balance is over $10,000 at any point during the tax year.
Why'd I open up another door?
Yeah, exactly. So yeah, all of these things, it's there's a lot around this. If you're dealing in it, that's great, but you have to be aware that there is US tax reporting surrounding this.
All right, great. No, that's great, but okay.
Yeah.
Now I know during the CARES Act and everything, or during this whole pandemic, there was a lot of leniency or benefits to the use of NOLs and business losses. And I hear that there's changes now. They're reverting back to old rules and stuff like that.
Yes. Yeah. The Tax Cuts and Jobs Act, did include limitations with respect to net operating losses and business losses. The Tax Cuts and Jobs Act, limited net operating losses on a 1040 to 80% in the current year of your taxable income. So, and the business losses are limited to only offsetting other business income, up to $264,000, I think, for 2021. The CARES Act suspended both of those limitations because, pandemic, we didn't want taxpayers, they really needed the cash. So the CARES Act suspended both of those limitations and allowed taxpayers to go back and amend their returns to get additional refunds. So it helped a lot of businesses that were hurting during this difficult time. Well, that holiday's over now, Brad. So starting in 2021, these limitations are now back. So it is something new that taxpayers are going to see this year, and we just wanted them to be aware of it.
Okay, well,
right.
You always make me feel better, Mary, and you just made me feel better because I did not realize that this whole pandemic was a holiday. So I feel better now.
I say that.
This was a very long holiday.
Oh,
And
I
in
guess it
Europe,
was.
yeah,
Yeah.
Europe, a vacation is a holiday. So this was a long
Yeah,
vacation.
lots of fun.
Right. So speaking of the CARES Act and certain changes, there were some other things that they had in there, some other provisions that have, gone away, and,
Yeah.
people really have to watch out for. Some, and one of them, if we talked about it back in November to raise their attention, but it's late now, it's something like the required minimum distributions. They didn't have to take them last year, 2020, but they had to take it in 21. So I know something like that. And there were some other ones, I think, that some of the CARES Act things are gone too, right?
Yeah, unemployment. As part of, the American Rescue Plan Act, they allowed taxpayers to exclude a portion of their unemployment income on their 2020 returns. It was $10,200 if they made less than 150,000 of adjusted gross income. Well, that was a one-year thing. In 2021, if you received unemployment income, the full amount will be taxable on your federal return. So I wanted people to be aware of that. If they didn't have, taxes withheld, they might, owe some additional tax this year. All right.
Wow. Okay, that's one.
So that's not good. That was one of them. The other one was the CARES Act allowed people who had businesses to defer, or self-employed individuals as well as small businesses, to defer 50% of their self-employment tax. That has to be repaid starting in 2021. So the first installment, which was 50% of the deferral amount, was due in December 31st of 2021, and the balance is going to be due by the end of 2022. So
okay,
taxpayers haven't paid it, they really should, do it as sooner than later.
Right. Yeah, I had a client that was able to defer for household help $1,600, and they got the one notice that they owed the $800. And I said, just pay the $1,600. I'm not flipping with their money, but you're going to get another notice. You're going to ask me again, and for this amount. That was my recommendation to them. If they did, okay. If they didn't, okay. Either way.
Yeah, if they're keeping track of it and they're going to do it, and they that's fine. But if it's, some of it's not a lot of money, so it depends on how much money it is, I guess, Brad.
Right. Yeah, I'm not spending people's money, so I want
Yeah.
people to think that Brad's careless.
Yeah, those are the big things I wanted to mention,
Right. We mentioned the IRA. I knew that was a big one, but it's late already. They had to take it by December 31st.
Oh, yeah. Well, the other thing about the IRAs, there's some taxpayers that took a distribution, a pandemic related distribution. If they were impacted by the COVID virus, they could take a distribution from their 401ks or their IRAs. And then if they pay it back within 3 years, it's as if they never took the money out. So the first installment, so if they would have to pay back 50% of it this year, and then they can not have to pay the tax on that income. All right.
Okay.
A third was due last year, a third's going to be due this year, and a third next year. And if they pay that back, just want to remind them about that they won't have to pay tax on it at all.
They can't pay back the third from last year. That's already done. They had to pay tax on that. It's not like they can go get a refund on it. So, but whatever's remaining, right?
Well, no, if they paid it back within the 3 years, they can go back and amend the return. Yep.
Amend. Oh, okay.
Yeah, they'd have to amend it. But if they didn't pay it back within that tax year, then we had to report it and they had to pay the tax. But if they all of a sudden pay the whole thing off this year, we can go back and amend that return from that for them and get a refund.
Okay. Interesting. I didn't know about that. I thought that you couldn't go back. Wow. Great.
Yeah.
The last one I have a question on, because I hear about this in business all the time, business returns, commercial returns. There's not a lot of talk about it in personal, but I think it probably comes up more than people know, and that's nexus issues.
Yeah, that happened a lot, especially with people in our area, people who work in New York and live in New Jersey, or work in New York and live in Connecticut. The state of New York has this tricky rule that's called the convenience of the employer rule. So if you worked, all of 2021 from your home office in New Jersey, you're still going to be in there. You don't have if your company doesn't have an office located in New Jersey, you're going to have to pay tax to New York, even though you weren't in New York a day, for not even 1 day for the year. Okay. You'll get a credit for the New York taxes you pay on your New Jersey return. So it won't cost you anything, but what taxpayers didn't understand, and some people pushed the envelope, Brad, last year and said, I wasn't in New York, I don't want to pay them any taxes. Well, New York was all over that. And these individuals received notices, and they had to, to go essentially, get audited to see, where they were, if they were working for a client or just working out of their home outside
Right.
the state of New York.
Yeah, I mean, otherwise the business would have to register in New Jersey, in essence, pay payroll taxes in New Jersey for you to be qualified as a New Jersey employee.
Yeah, that's a good
Otherwise,
point.
considered a New York employee.
Yeah, we just want people to be sensitive to that, it depends on the state really where your employer is located as to whether or not you can get away with not, if you're working from home, if that counts as working in the state.
And some states are very aggressive with this.
Yeah,
Right.
definitely.
Well, those are my 5 questions I had for you. I appreciate the time. I know you have a presentation that you're supposed to be working on, so I want to respect your time
Oh,
and
thanks, Brad.
let you get to that. And Mary, if anybody has questions, please feel free to reach out to Mary. She's really knowledgeable about this stuff. And I want to thank you very much, Mary, for another great presentation.
Oh, you're welcome, Brad. It was fun. Take care.
Thank you.
Bye.